Hello, my dear friends. Well, Shivateja is back again in front of you, this time with another exciting and fantastic video. In fact, the most awaited discussion that is about amendments applicable for November 2020 exam. I know that most of you have been waiting for this, watching this particular video in terms of learning the amendments in a quick, easy and comfortable manner. So we'll discuss all the amendments which are specifically applicable for November 2020 exam. Now, before I start, first fundamental thing what I'll tell you is very clear that when we are talking about November 2020 exam, my dear friends, all the notifications, circulars, amendments which have been brought up to 30th April 2020 will be applicable for your exam. Why 30th April 2020? The logic is very simple. That is nothing but 6 months prior to the exam, whatever notification comes, they'll all will be applicable for your exam. So it is very important that you understand that all the notifications which have come up to 30th April 2020 are applicable for your exam. And there are some really good points what we need to learn and discuss in detail. Clear? Now let me tell you one point very clearly that we all know the fact that May 2020 exams got cancelled. We know because of COVID-19 the exams were not conducted by ICI, and subsequent to that exams are being conducted in November 2020 exam, which is scheduled, which is planned, which is ready, which is going to happen very soon. Now in this connection and in this context, my dear friends, let me tell you that ICI every time from an examination standpoint they release a statutory update. Statutory update consists of all the relevant amendments which are applicable for the exam. And in fact, what I have done is I have summarized all the amendments which are applicable for your exam. In fact, few amendments were covered in statutory update and few amendments were covered at the end of every chapter. Now what effort I have taken is that I consolidated both of them and made a document so that it will be very easy for us to revise and learn the things in easy and comfortable manner. Now one point is very clear that I prepared a PDF document on all the amendments applicable for exam, and I already shared the PDF document with you through Telegram and other channels. Any which ways, the students who are not a part of Telegram group or who have not interacted with me earlier, don't worry, I'll share the link of the PDF document in the description box of this video. From here also you can download this particular video and you can watch, no problem. Okay, so PDF also will be there for you, video anyways I'm there in front of you, don't worry. Okay, and before I start, one thing very clear, my dear friends, I'll not waste any inch of your time also because time is short. Let's be cut to the point. Let's directly focus on all the amendments. One after other I'll discuss all the amendments in detail, and at the same time in a crisp, comfortable and easy manner I'll discuss the amendments. And I'm not going to make this video as part 1, part 2, part 3, part 4. I'm not interested in doing that for a reason, because there's not too much of amendments. There are hardly some 20-30 points what we are required to learn. That 20-30 points are not something new. That's something what you already learned, but few small modifications have been done in terms of the concept what you have learned. If those things we revise and exercise once again, our job is over. For that, I don't want you to waste your time. So in just a span of a short time, we'll complete all the amendments. Clear? So I just want your complete focus. Any which ways, whatever queries which you might get, I'll cover it, that queries during the course of discussion itself. And even after video is over, after you watch the video, if you still get any doubts and any concern, feel free to comment in the video. I'll reply back to you by my comment. Yeah. So without any delay, let's start the discussion of all the important amendments applicable for November 2020 exam. Not just important, every amendment we'll talk in detail so that you are completely perfect with all the amendments applicable for November 2020 exam. Friends, one last thing before I start is that IDT is one such subject which is very scoring, especially in your CA final group 2 syllabus. IDT is one such subject where exemption is highly gettable. The reason is very simple. It's not so complex. It is not so complicated. At the same time, content wise, the size is also less. So when the size is also less, it's your utmost duty to make sure that you are completely perfect from all the parameters and you guys get an exemption in the exam. That's your responsibility. Out of my past experience of teaching so many thousands of students, there were many cases where majority of the students have got exemption indirect taxes And it is not an apprehension, it's a fact that there are many number of students who actually passed their group 2 because of IDT. Because in IDT they scored big numbers. In other subjects, even though slightly numbers were less, still students have qualified. It's very important that in every group you target 1-2 subjects and make sure that they become your game changer. And in group 2, one such subject is your indirect tax laws. So let me take some good time and effort from my side so that you guys will be perfect with all the amendments for November 2020 exam. So without delay, let's start. This is your amendments material, guys. I already shared this. PDF is there in the description box. From there also you can download the material. And of course, that's me only. So this is our YouTube channel, Shivateja Tax Classes. In case you want to, anytime you want to watch any video, you can just access this particular channel. Do share and subscribe. Yeah. And that's my phone number and that's email ID. Anytime you want to reach me out, you can reach me out. No worries. Come on. Let's start the discussion. CFI and indirect tax laws, amendments relevant for November 2020 exam. Let's start. First, let's talk about discussion about the chapter of supply. There are 2-3 important amendments in relation to chapter of supply. Let's discuss that. As you all know, my dear friends, the concept of supply is dealt by section 7, and of course we have got section 8 which deals with composite supply and mixed supply. And I'm sure you remember that composite supply is that supply where 2 or more individual supplies are naturally bundled and one of which is a principal supply. Then only we call it as composite supply. And if they are not naturally bundled, we don't treat it as composite, but we treat it as mixed supply. And the difference in tax treatment is that composite supply is taxable at the rate of principal supply, whereas mixed supply is taxable at highest rate. This is a very, very important concept what you have to keep in mind. And in section 7 concept of supply, I hope you would have learned this concept of schedule 1, schedule 2 and schedule 3. What is schedule 1 talking about, my dear friends? Schedule 1 deals with the concept of transactions regarded as supply even though there is no consideration. There are some transactions given by the law which are regarded as supply even though consideration is not there. Consideration is not there, but still it is regarded as supply. Now what are those? Number 1, what are those? Come on. Services by employee to employer in the course of employment. Correct? No. That is services by employee to employer is basically a point about transactions which are neither regarded as supply of goods nor regarded as supply of service. But what are we talking about? Transactions regarded as supply even though there is no consideration. In that, what is the first point? Permanent transfer or a disposal of business asset on which ITC is claimed. Supply between distinct or related persons in the course or furtherance of business. Number 3, supply of goods from principal to agent or vice versa. Last one, import of services by a person from a related person or from any of his establishment outside India in the course or furtherance of business. These 4 points are given by section 7(1)(c) read with schedule 1, which talks about transactions regarded as supply even though there is no consideration. Consideration is not there, but still it is regarded as supply. Then schedule 2 deals with what are the transactions which are regarded as supply of goods and what are the transactions which are regarded as supply of services. Very interesting. Transactions which are regarded as supply of goods and what are regarded as supply of service. In that, one foremost important point which I clearly taught you, my dear friends. What is that point? Come on. That clear point what we discussed was very important. That is, we were talking about where there is a transfer of title along with the transfer of right, then we treat it as supply of goods. But if there is a transfer of right but there is no transfer of title, we regard it as supply of service. And in case of transfer of title along with transfer of right, in that case title can pass either immediately or at future date. For that example is classic example, hire purchase. Hire purchase is one such system where ownership will pass only on payment of last installment. Still it is regarded as supply of goods. Then finally last one, schedule 3. Schedule 3 talks about transactions which are neither regarded as supply of goods nor regarded as supply of service. Read with section 7(2)(a). In that we had the point of employee to employer, court or tribunal, funeral, burial, crematorium, mortuary, MPs, MLAs, actionable claims, land and building. All these points were there with relation to transactions which are neither regarded as supply of goods nor regarded as supply of service. Come on. Now, let's look at an interesting amendment in this topic of supply. The first amendment what we will talk now. See now. Service by way of grant of alcoholic liquor license is neither a supply of goods nor a supply of service. Friends, first of all, we know the fact that GST definition itself is GST is a tax on supply of all goods or services or both except alcoholic liquor for human consumption. That clearly signifies to us that alcohol liquor for human consumption is one such product which is permanently kept outside GST. It is permanently kept outside GST. Correct, friends? Now, let me tell you, practically on alcoholic liquor for human consumption, state government levies the excise duty, VAT, CST and all. That is levied by state government. Excise duty on alcoholic liquor for human consumption is levied by state government. Now here, one interesting clarification they have given is service by way of grant of alcohol liquor license against consideration in the form of license fee. Obviously, whoever want alcohol liquor license, they should pay some license fee or application fee or by whatever name called. They have clarified that that is not regarded as supply of goods and not regarded as supply of service. When we say that it is neither supply of goods nor supply of service, what does that mean? That means that it is not taxable. It is neither supply of goods nor it is supply of service. In net effect, that it is not taxable. Next line. See now. Circular 121 by 40 by 2019 GST dated 11th October 2019 has clarified that above special dispensation applies only to supply of service by way of grant of liquor licenses by the state government as an agreement between the centre and the state and has no applicability or precedence value in relation to grant of other licenses and privileges for a fee in other situations where GST is payable. That means in case of any other licenses given by state government, that is definitely taxable. This concept of not taxable or exemption or neither regarded as supply of goods nor regarded as supply of service, this concept will apply only and only to service by way of grant of alcoholic liquor license. I repeat one more time. If it is not alcohol liquor license, but it is some other license, then definitely GST will apply. The only case where it is neither regarded as supply of goods nor regarded as supply of service is the concept of service by way of grant of alcoholic liquor license. If it is any other license, then definitely GST will apply. Next. Second point. See that clarification in respect of goods sent or taken out of India for exhibition or on consignment basis for export promotion. What does that mean? Let me give an example here. Listen. So let's say there is Tata Limited in India, okay, and in Singapore there is a international steel exhibition. I repeat one more time. There is a company known as Tata Limited in India, and in Singapore there is an international steel exhibition going on. And what Tata Limited thought is they wanted to participate in that exhibition and they have taken some steel products from India to outside India. These steel products are taken from India to outside India for purpose of what, my dear friends? For purpose of exhibition. The point is very clear. Sir, I'll repeat one more time. Steel products are taken from India to outside India only and only for the purpose of exhibition, not for any other purpose. Now, one basic question let me ask you. When steel products are taken to the exhibition, is there any guarantee that some products will be sold? No. Other question I'll ask. Is there any guarantee that some products will not be sold? No. So there is a possibility that some products may be sold, and there is also a possibility that some products may not be sold. So there is no hard and fast rule and there is no guarantee that some stock will be sold, and there is no guarantee that some stock may not be sold. And here exhibition is not going to pay any consideration to Tata Limited. When consideration will come to Tata Limited is only when the goods are taken to the exhibition, and in exhibition somebody liked that product and that somebody purchased that product in the exhibition. Then only Tata Limited will actually make some money. That means very clear that there is no consideration flowing from exhibition to Tata. When there is no consideration flowing, obviously it is not regarded as supply, because sometime back only I told you the point that a transaction is not regarded as supply if there is no consideration. However, there are some special cases given by section 7(1)(c) read with schedule 1 which are regarded as supply even though there is no consideration. Those exceptions are there, but generally if there is no consideration, it cannot be a supply. Getting clarity, right? Very interesting and important point. And let me highlight to you one more important point here. Listen, carefully listen. Now, this is something like goods sent on approval basis. This is something like goods sent on approval basis. Why? Because logic is simple. Goods are being taken from India to outside India, and there is no guarantee that somebody will buy the goods, and there is no guarantee that somebody will not buy the goods. That is why it is something like goods sent on approval basis. If somebody likes it or approves it, sale is done. If nobody approves, supply is not done. That is why, my dear friends, in the concept of tax invoice chapter, there is one interesting concept there, where law has specified that in case where goods are sent on approval basis, in that case, invoice must be issued at the time when supply takes place or 6 months from the date of removal, whichever is earlier. Now, when I say at the time when supply takes place, what does that mean? Obviously, supply will take place only when customer has approved. Correct, right? So, invoice must be issued at the time when supply takes place or 6 months from the date of removal, whichever is earlier. Interesting and important. Clear? Let me go back. And one more interesting point, let me tell you, sir. When we told very clearly here that, when we discussed very clearly here that this transaction is not a supply at all. Now, basic fundamental point, when it is not a supply, it cannot be regarded as a zero rated supply. I hope you know this concept of zero rated supply. There is a small difference between exempted supply and zero rated supply. Exempted supply is a case where output we do not pay tax, but we cannot claim input tax credit. Whereas zero rated supply is a case where output we do not pay tax, but happily we can take input tax credit, provided zero rated supply under bond or LUT, letter of undertaking. And let me make you recollect that in zero rated supply, there are only two categories. Number one, exports. Number two, supplies to SEZ. Only these two are covered in zero rated supplies. Now here, when goods are taken outside India for the purpose of exhibition, when it is not a supply at all, obviously it is not a zero rated supply, because to become a zero rated supply, first it should become supply, right? When it is not a supply, how can it be a zero rated supply? Let me take you back to the point. See now, clarification in respect of goods sent or taken out of India for exhibition or on consignment basis for export promotion. Let's read. In case of goods sent or taken out of India for exhibition on consignment basis, it is not regarded as supply since there is no consideration, obviously. Next, however, certain exceptions to the above are the activities enumerated in Schedule 1, we know that, which are treated as supply even if made without consideration. Moreover, when the transaction itself is not a supply, it cannot be regarded as zero rated supply. Common sense point. When it is not a supply at all, how can it be regarded as zero rated supply? Because first of all, to become zero rated supply, it should be a supply, right? If without being a supply, how can it be regarded as a zero rated supply? A basic fundamental point. Clear? Good. Next, another last interesting amendment in the concept of supply. Listen. I'll give an example so that you get clarity of thought here. So let's say there is a person known as Shivateja. Now, what I have done is, there is one temple and Shivateja donated, let's say, 1 lakh rupees to the temple, and temple felt extremely happy. Wow, Mr. Shivateja has given 1 lakh to the temple, so kind of him. Now, out of affection, love and affection and gratitude towards Shivateja, temple has displayed one name board stating that donor Shivateja, 1 lakh, like that they specified. Now tell me, is temple trying to do advertisement for Shivateja? Answer is no. It is only that out of gratitude and affection towards Shivateja, they displayed my name. That's all. Now I'll ask you one more question here. Do you really think Shivateja donated that 1 lakh to the temple for the purpose of advertisement service? No. It's only out of a charitable activity I donated 1 lakh to the temple, and in turn temple, out of gratitude towards me, they displayed my name. And moreover, they did not even write Shivateja taxation, Shivateja tax classes, like that they did not write. If they write my business details, that means it is something like indirectly advertisement is happening. But here they did not write any business detail at all. It is just normal transaction done. Friends, when we talk about IPL going on, very actively going on. Now we talk about IPL, all the players who are playing in IPL, they obviously on the shirt, on the trouser, on the cap, on the helmet, on the front side, back side, everywhere there are logos of different companies. Why? Because all those companies have given money to IPL. They have all sponsored IPL. So basically, why did they give money to IPL? Because they are getting the advertisement service. But here, Shivateja did not give 1 lakh to the temple for taking advertisement service. And temple was under no obligation to display Shivateja's name. But they have displayed that only out of gratitude towards Shivateja. Now this transaction cannot be regarded as supply. This is what they have clarified. Let's look at the point. Levy of GST on the service of display of name or placing of nameplates of the donor in the premises of charitable organization receiving donation or gifts from individual donors. Concentrate, focus. Don't sit like that, relax, sleep and watch. Don't do that. Happily sit properly, focus and listen and watch properly. Please, no time pass. Time is not there. Time is short. So please work hard and please focus. That is the reason I am also not telling you anything else except your amendments. That much only we'll talk. I'll not waste your time. No part 1, part 2, part 3 business. Straight away one perfect video with all the amendments in crisp, easy, perfect manner will close. That's it. So please focus. Now, if all the following conditions are satisfied, then GST will not apply. Number 1, gift or donation is made to a charitable organization. Obviously, temple is a charitable organization. Religious trust it is. The payment has a character of gift or donation, obviously. And the purpose is what, my dear friends? Philanthropic. That is, it leads to no commercial gain and it is not an advertisement. I did not give to them for the purpose of advertisement. I gave it only out of having an element of charity in my thoughts. But out of affection towards me, gratitude towards me, they displayed my name. But just because they displayed my name doesn't mean that they are providing me advertisement service. That's it. With this, we are done with the story of amendments in relation to the chapter of concept of supply. Next topic. So friends, we are done with discussion about the concept of amendments in relation to the concept of supply. Now let's look at amendments in relation to the topic of charge of GST. As you all know, my dear friends, this charge of GST topic has got two important concepts. One, especially in relation to the concept of RCM, that is reverse charge mechanism. What are all those cases and circumstances where tax is required to be paid by recipient? You would have learned this already, my dear friends, especially GTA, directed to body corporate. We have got so many points there, what you have already learned. Now, there is also an important concept in charge of GST that is in relation to the topic of composition scheme dealt by section 10. Now, in this context, there are some amendments done. Let's look at that. See now. Manufacture of aerated water and supplier of aerated water cannot opt to pay tax under composition levy. Now what does that mean? Let me explain to you. Sir, if you remember properly, composition scheme concept, as you all are aware, that composition scheme concept is dealt by a wonderful section known as section 10, which clearly says that if aggregate turnover during preceding financial year does not exceed 1.5 crores, then current year we can opt for this composition scheme. And in case of a manufacturer, the rate of GST is 0.5% plus 0.5% of turnover. And in case of restaurant or catering services, it is 2.5% plus 2.5% of turnover. And finally, in case of a trader, one special point we have here, that is 0.5 plus 0.5% of taxable turnover. In case of a trader, we will calculate 0.5 plus 0.5 only on taxable turnover. But for manufacturer or restaurant cases, it is 0.5 plus 0.5 of turnover, restaurant 2.5 plus 2.5 of turnover. Now here, one important concept which you would have already heard, my dear friends. Manufacturer of certain notified goods is not eligible to opt for a composition scheme. Now what are those goods? Let me make you recollect. The goods what was already covered was pan masala, tobacco and tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa. Come on, let me repeat. What are the points? Pan masala, tobacco and tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa. And one new point added recently in this is aerated waters. Aerated water is nothing but cool drinks which has got gaseous substance. For example, Sprite, Coke, Thumbs Up. We treat all this as aerated waters. Come on. Going back to the concept, read now. Earlier, certain goods such as pan masala, ice cream and other edible ice, whether or not containing cocoa, tobacco and manufactured tobacco substitutes were notified goods. That means what? Manufacturer of these goods were not eligible to opt for composition scheme, and supplier of these goods was not eligible to go for notification number 2 by 2019. I hope you remember notification 2 by 2019. Notification 2 by 2019 talks about if aggregate turnover during preceding financial year does not exceed 50 lakhs, then current year you can opt for this notification and pay tax at the rate of 3% plus 3%. See now, with effect from 1/10/2019, notification 14 by 2019 dated 7th March 2019 and 2 by 2019 7th March 2019 have been amended to include aerated water in the above negative list of goods. That means earlier what was covered? Pan masala, tobacco and tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa. And the new point added now is aerated waters. So manufacturer of these goods cannot go for composition scheme. Supplier of these goods cannot opt for notification number 2 by 2019 dated 7th March 2019. Next point, amendment in reverse charge notification. Now what is this? Let me explain to you in a simple manner. Listen. So let's say there is somebody known as Taxman Publications. And there is Mr. Shivateja wrote a book on IDT. And what has happened is Taxman Publications told, sir, we want to publish your book. I told, fantastic, do it. Now Taxman Publication is basically the publisher and Shivateja is nothing but author. Correct or not? Now basically, who is giving service to whom? Shivateja is giving service to Taxman Publication. That means author is basically the supplier, publisher is basically the recipient, and what am I transferring is I am transferring temporary transfer of copyright, for which obviously the publication company will pay me royalty. Correct or not? Now the concept is very simple. Whenever a service is supplied by author to publisher, this was actually covered under RCM. Even now also it is covered under RCM. But one amendment what they have done is that this particular author, that is Shivateja, can choose to pay tax under forward charge. That means Shivateja himself can tell taxman, don't worry, you need not pay reverse charge. I will only pay under forward charge. That option is given in the law. That means, I repeat one more time, listen. Services supplied by author to the publisher is covered under RCM. That means publisher is liable to pay GST. However, one clear point is that the supplier or the author can choose to pay tax under forward charge. That is optional. But once he opts for forward charge, he cannot withdraw for a period of 1 year from the date of exercising the option. Getting clarity, right? That means in general it is RCM, but author can choose to pay tax under forward charge. But if he chooses to pay tax under forward charge, then he cannot withdraw that option for a span of 1 year from the date of exercising the option. Clear, right? Is that? See now, payment of tax under reverse charge made optional in case of supply of service by an author by way of transfer or permitting the use or enjoyment of a copyright relating to original literary work to a publisher. Correct, right? Obviously that copyright is given to a publisher. Now see, however, author can choose to pay tax under a forward charge. He can choose to pay tax under a forward charge. Option is given to them, provided if he has taken registration under a CGST Act and filed a declaration in the prescribed form that he exercises the option to pay CGST on the said service under a forward charge in accordance with section 9(1) and to comply with all the provisions as they apply to a person liable for paying tax in relation to supply of goods or services. And third point is very important, and that he shall not withdraw the said option within a period of 1 year from the date of exercising such option. That means once he go for this option, he cannot withdraw within a span of 1 year. Such a brilliant point given in the law. Then finally, he makes a declaration on the invoice issued by him in the prescribed form to the publisher. He makes a declaration on the invoice stating that don't worry, you need not pay tax under reverse charge. I will only pay tax under forward charge. That's it. Small concept but interesting. So what is the small concept? In nutshell, the bottom line is simple. That is, services by author to the publisher is generally covered under RCM, but author can choose to pay tax under forward charge. But once he exercises the option, he cannot withdraw within a span of 1 year. And he should make a declaration on the invoice. That's it. Next point, some new services under reverse charge mechanism. What is that? Services of lending of securities under securities lending scheme of SEBI. Now what is this? Listen. So let's say there is one person, Mr. X, and there is a lender agency. Other words, let me use a better language, lending agency. And this lending agency is actually approved by SEBI. It's not some third party. SEBI monitors these guys. And we know what is SEBI, Securities Exchange Board of India. Now what has happened is, Mr. X has got some securities. Now this securities are given as loan. Otherwise, Mr. X has lent that securities through a lending agency to one person known as Mr. Y. And Mr. Y is basically the borrower of securities. So what is happening here is that, for example, if I have got some Reliance shares with me, Shivateja has got Reliance shares with me, and Raviteja is interested to take that Reliance shares for a short span of time. Now what Shivateja will do is, Shivateja will lend that securities to Raviteja, let's say for 6 months. Now after 6 months, it is the responsibility of Raviteja to give back the number of shares what I gave to him. It is something like how money is given on loan, securities are also given on loan. Correct, my dear friends? for a lending fee. For a lending fee, obviously, borrower is required to pay some lending fee. Now, why we are talking about this concept is because point number one, if you remember properly, definition of goods says goods cover every kind of movable property other than money and securities, but includes actionable claims. Correct? In the same manner, service definition covers anything other than goods, money and securities. That means securities is not covered in the definition of goods, securities is not covered in the definition of service. Correct? When securities is not covered in the definition of goods, security is not covered in the definition of service, that means what? On the securities, GST will not apply. Now, on the securities, GST will not apply, but the transaction of lending of securities will be subject to GST. That means on the lending fee, GST will apply. And earlier, this was covered in forward charge, and now they brought this concept under reverse charge mechanism. Now, once I say reverse charge mechanism, what will happen? The borrower will become liable to pay GST. Clear, right? So earlier X was liable to pay GST. Now who will become liable to pay GST? Y will become liable to pay GST. See now, supplier of service, lender, a person who deposits the securities registered in his name or in the name of any other person duly authorized on his behalf with an approved intermediary for the purpose of lending under a scheme of SEBI. Don't think this is an unapproved scheme. This is a lending scheme approved by SEBI. Perfectly approved scheme. Then recipient of service is a borrower, that is a person who borrows the securities under a scheme through an approved intermediary of SEBI. Clear? So net effect, transaction of lending of securities under transaction of lending of securities under securities lending scheme of SEBI was earlier covered under forward charge, but now it is taxable under reverse charge mechanism. Next, clarification regarding reverse charge mechanism on renting of motor vehicle service. Wonderful. Listen. Let me discuss in a simple way, my dear friends. When we talk about renting of motor vehicle, whoever is the supplier, he has an option to opt for 12% or 5%. In 5% case, no ITC, but ITC only with respect to same business. That means if supplier has taken motor vehicles on rent, on that whatever GST he paid, that he can take credit, but he cannot take any other credits. 12% case, happily full credit. Like that, supplier has got two options, my dear friends. Getting clarity, right? Supplier has got two options. Now the point is very clear. In 12% case, always the concept is forward charge. But in 5% case, there is one condition. That is, supplier is other than BC, recipient is BC. BC means body corporate. Supplier is other than body corporate, recipient is body corporate. If these two conditions are satisfied, then RCM will come. Else, forward charge will apply. If these two conditions are satisfied, what will happen, my dear friends? RCM will apply, else forward charge will apply. That means logic is very simple. The concept of reverse charge mechanism will come into picture only when three conditions are satisfied. Now, what are the three conditions? Condition number 1, supplier opted to pay tax at the rate of 5%. Condition number 2, supplier is other than body corporate. Condition number 3, recipient is body corporate. If all these three conditions are satisfied, then what will happen, my dear friends? Then provisions of RCM will apply. But by any chance, if these conditions are not satisfied, then RCM will not apply. Clear, right? Very, very interesting point, friends. I repeat one more time. Provisions of RCM will apply only if supplier opted to pay tax at the rate of 5%, supplier is other than body corporate, and recipient is a body corporate. Go back. See this chart is from your statutory update of ICI. Look at that. 12% straight away forward charge. 5% if supplier is body corporate, again forward charge. If supplier is other than body corporate and recipient also other than body corporate, again forward charge. If supplier is other than body corporate, receiver is body corporate, then only reverse charge will apply. This point is very important to be kept in mind. I repeat one more time, friends. In case of renting of motor vehicle, reverse charge mechanism will apply only when three conditions are satisfied. Condition number 1, supplier opted to pay tax at the rate of 3%. Condition number 2, supplier is other than body corporate. Condition number 3, recipient is a body corporate. If these three conditions are satisfied, then reverse charge mechanism will apply. If not, there is no question of RCM. That's it. Next, clarification on issue of GST on airport levies. What is that? Listen. Sir, there is somebody known as airport authorities. Classic example, AAI, Airport Authorities of India. Now let's say there is someone known as Indigo Airlines. Indigo Airlines is different. Airport authorities are different. Airport authority is something like Airport Authorities of India, and whereas Indigo Airlines is something like an airline company. Indigo Airlines is what? Indigo Airlines is an airline company. Correct or not, friends? Yes. So now, these airport authorities, what they do is, they levy PSF or UDF on passengers. What is PSF or UDF? PSF stands for passenger service fee and USF stands for user development fee. This passenger service fee or user development fee is levied by airport authorities on the passengers. But the interesting point to be noted is that airport authorities collect that through Indigo Airlines. Other words, in simple terms, Indigo Airlines is acting as a pure agent. Indigo Airlines is acting as a pure agent. That means in net effect what is happening is that airline company is collecting PSF or UDF from passenger on behalf of airport authorities. Now, strictly speaking, who is supposed to collect that UDF or PSF? That's nothing but airport authorities. But airport authorities, instead of directly taking from the passenger, what they are doing is that they are telling or they have informed the Indigo Airlines, telling that you collect that amount from the passenger and hand it over to the airport authorities. So strictly speaking, Indigo Airlines is giving service to the airport authorities, and the service is by way of collection of PSF or UDF. And for doing that, airport authorities actually pay collection charges to Indigo Airlines. Now here are two important concepts what I want to tell. Number 1, on the collection charges, Indigo Airlines is liable to pay GST. Number 2, on the PSF or UDF, airport authorities is also liable to pay GST. That's it. Simple concept, but more of a clarificatory in nature. Going back. Clarification on issue of GST on airport levies, passenger service fee and user development fee are consideration charged by airport operators for providing these services to passenger. Thus, services provided by airport authorities to passenger against such consideration are liable to GST. Please observe here, this is a circular. Circular is more of a clarificatory in nature. Next slide. Collection charges paid by airport operator to airlines. Come on friends, what is the line I wrote? The collection charges paid by airport authority to airlines are a consideration for the services provided by airlines to the airport authorities, and airlines should be liable to pay GST on the same under forward charge. And of course, ITC of the same will be available with the airport operator. Clear, right? Simple point, but still very powerful. Next, few important amendments which are brought by Finance Act 2019. They are also a part of your amendment story. This is also required to learn. Come on, see now. The following explanation was earlier covered by Order number 1 by 2019 dated 1st February 2019 and it is now inserted as an explanation in section 10.1. Now what is that? Let's see. For the purpose of second proviso, the value of exempt supply of service provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount shall not be taken into account for determining the value of turnover. This point was there before also. That means very clearly in composition scheme, while calculating aggregate turnover, value of exempt supply by way of extending deposits, loans or advances, where the consideration is interest or discount, that is not taken into account for determining the value of turnover. This point was earlier covered by order number 1 by 2019, but now it is covered by section 10.1. That's it. Next, CTP or NRTP is not eligible to opt for composition scheme. This point was there before also, but the point to be observed here is that earlier this point was covered by Rule 5, but now it is incorporated in section 10 subsection 2. Then, the concept covered by notification 2 by 2019 dated 7th March 2019, 50 lakh story, is now brought into CGST Act itself by way of insertion of section 10 subsection 2A. So the concept which was earlier covered by notification 2 by 2019 dated 7th March 2019, now it is covered by section 10 subsection 2A. Same concept, but one additional point they inserted. What is that? Concept is same, but the additional point specified is that manufacturer of such goods or supplier of such services as may be notified by government on recommendation of the council is not eligible to opt for this benefit. Now what are that goods? Already we know: pan masala, tobacco substitutes, ice cream and other edible ice, whether or not containing cocoa, and one point recently added, aerated waters. Clear? Good. Next, all other provisions applicable to 10.1 are also applicable to 10.2a. Next point. Following explanations are inserted after section 10.5. What is that first one? Aggregate turnover shall include value of supplies made by such person from first day of April of financial year up to the date when he becomes liable for registration. When he becomes liable for registration, 10 lakhs, 20 lakhs, 40 lakhs, as the case may be. Now, whatever turnover is done up to 10 lakhs, 20 lakhs, 40 lakhs, that will be considered for the purpose of calculating aggregate turnover. But that shall not include value of exempt supply of service provided by way of extending deposits, loans, advances, where the consideration is interest or discount. This point already I told you, sir. Next, for the purpose of determining the tax payable by a person, the turnover in state or turnover in UT shall not include the following: supplies from first day of April of financial year up to the date when such person becomes liable for registration. And second point we know, deposits, loans, advances, where consideration is interest or discount. Now what does that mean? Listen. So let's take an example. Let's take an example. Turnover for 18-19 is, for example, let's say 40 lakhs. 19-20 opted for, okay. Let's say there is one person, Mr. A, and Mr. A is in Telangana state. And Telangana, I'm sure you know that limit is 20 lakhs. Whether engaged in goods or engaged in service or engaged in both, still the limit is 20 lakhs only. And what has happened is turnover for 18-19 was actually 45 lakhs. Now straight away, when you calculate aggregate turnover, we will say 45 lakhs. But when you start calculating tax at the rate of 3% plus 3%, we will do only on 25 lakhs. That means the first 20 lakhs where you are not registered, obviously after crossing 20 only, liable for registration. Now for first 20 lakhs, very clearly, first 20 lakhs was not registered person. Now that first 20 lakhs will be considered for calculating aggregate turnover, but for the purpose of tax payable, that first 20 lakhs or whatever it is, limit of registration, that will not be considered for determination of tax payable. Very interesting and powerful point, extremely important. Done. There ends the story in relation to amendments pertaining to what, my dear friends? Pertaining to the concept of charge of GST. We have taken so much time for these two topics because there are some small, minute, detailed amendments where they have got a lot of depth involved, so which we can't take chance. Listen. Next. Let's look at amendments in relation to exemptions from GST. Few small amendments. Let's look at that. First one, there are two columns here, prior to amendment, post amendment. Services provided by central government, state government, union territory, local authority to a business entity with aggregate turnover up to 20 lakhs, 10 lakhs. Like this they specified earlier. But we know the fact that we have got a concept of 40 lakhs also, right? If a person is engaged exclusively in supply of goods, then the limit will be 40 lakhs. But the 40 lakhs concept will not apply to Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana. For these states, 40 lakh story will not apply. Of course, for Manipur, Mizoram, Nagaland, Tripura, the limit is only 20 lakhs. I mean, Manipur, Mizoram, Nagaland, Tripura, it is only 10 lakhs. They are special category states. So let me make you recollect, sir. Please, come on. So what we do is, Manipur. I'm telling this concept because this concept will come at the back of us again and again. Manipur, Mizoram, Nagaland, Tripura. Other side, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana. Other states. That means other states covers maybe Bihar, Karnataka, Kerala, whatnot. All other states are covered there. Now story is very simple, sir. In case of Manipur, Mizoram, Nagaland, Tripura, the limit is 10 lakhs. That means whether engaged in goods or service or both, limit is still 10 lakhs only. When I say 10 lakhs, that 10 lakhs is aggregate turnover. Aggregate turnover is defined by section 26. Which clearly says aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies, exports on all India basis under same PAN. Now see, for these 6 states, 6 only, Arunachal, Meghalaya, Sikkim, Uttarakhand, Puducherry, Telangana. For these 6 states, limit is 20 lakhs. If you are engaged in goods or engaged in service or engaged in both, still the limit is 20 lakhs only. But for other state, if you are engaged exclusively in goods, the limit is 40 lakhs. Exclusively in service, the limit is 20 lakhs. Both, the limit is 20 lakhs. That means 40 lakh story will apply only if a person is engaged exclusively in supply of goods. That too in all other states other than these two boxes. Correct? So for example, listen here very carefully. If let's say, there is one person, Mr. A in Karnataka, who is a trader in pens and turnover is, let's say, 38 lakhs. No registration is required because the limit is 40 lakhs. Clear, right? But apart from this, if he does any other service, then definitely registration is required, because the limit is not 40 lakhs, limit will become 20 lakhs. 40 lakh story will apply only if a person is engaged exclusively in supply of goods. In fact, in this context, in registration chapter, one important amendment is there, which I'll tell you here itself, because context has come. Let's say Mr. A has got interest income of, let's say, 1 lakh, and we all know that this interest income is exempt. We just discussed that value of exempt service by way of extending loans or deposits where the consideration is interest or discount, that is actually exempt, correct, right? And moreover, this is an exempt service and total figure is 39 lakhs. Now question is registration required? Strictly speaking, answer is yes, since limit is only 20 lakhs. Why it is only 20 lakhs? Because if you are engaged, 40 lakhs limit will apply only when you are engaged exclusively in supply of goods. But if you are doing only service, it is 20 lakhs. Goods and service both, then also it is 20 lakhs. 40 lakh story will come only if you are engaged exclusively in supply of goods. But this point has been amended. And after amendment, the answer is no. Why? Because they have specified that if a person is engaged in exempt service by way of extending deposits or loans or advances where consideration is interest or discount, still he will be eligible for the limit of 40 lakhs. That means even though that exempt service is there, still we will see the limit as 40 lakhs only, but not 20 lakhs. That means if let us say 38 lakhs is there, here it is interest is 3 lakhs, total becomes 41 lakhs. In that case, registration is required, since turnover is more than 40 lakhs. So logic is very simple. Why this concept is come? Let me repeat one more time. Sir, generally, if a person is engaged exclusively in supply of goods, the limit is 40 lakhs. There, one interesting point what they have clarified is that value of exempt service by way of extending deposits, loans, advances where the consideration is interest or discount, it is actually an exempt service. Now, the moment the person engaged in supply of goods does this service, then the limit should actually fall down to 20 lakhs. Why the limit should fall down to 20 lakhs? Because 40 lakh story will apply only if person is engaged exclusively in supply of goods. If he does good service both, then the limit is actually 20 lakhs. But here, one interesting point of clarification what they are given is that even though a person has got exempt income by way of exempt service, by way of extending deposits, loans, advances where consideration is interest or discount, he is still deemed to be engaged in supply of goods and he can enjoy the upper limit of 40 lakhs. That is the beauty of this amendment. Clear? Exactly. Now, what is the amendment they have done in exemptions concept is that earlier they covered only business entity with turnover up to 20 lakhs, 10 lakhs. Now, what change they have done? Up to such amount in the preceding financial year as it makes it eligible for exemption from registration. Like that they put a clause because it is now not just 10 lakhs, 20 lakhs story. Now there can be 40 lakhs concept also. This is done consequent to the amendments in threshold limit for registration prescribed for different state or UT. Clear? Same logic here also for arbitral tribunal. Earlier they told 20 lakhs, 10 lakhs. Now they told up to such amount in the preceding financial year for making it eligible for exemption from registration. They changed this language because earlier it was only 10 lakhs, 20 lakhs story. But now we also have 40 lakhs story. And in 40 lakhs, we learned two interesting concepts. One, 40 lakhs limit will apply only to a person engaged exclusively in supply of goods. And moreover, even if he does some exempt service by way of extending deposits, loans, advances, where consideration is interest or discount, still he is deemed to be engaged in supply of goods. Then, same concept here also for advocates. Senior advocate also same point. That means 10 lakhs, 20 lakhs language, they changed with up to such amount, up to which registration is not required. Next, new entry 9AA. Services provided by and to FIFA. That means services by FIFA or to FIFA. Football, Manchester, we know that, right? Yeah. Services provided by and to FIFA and its subsidiaries, directly or indirectly related to any of the events under FIFA Under 17 Women's World Cup 2020 to be hosted in India. Conditions: Director of Sports, Ministry of Youth Affairs and Sports have to certify that services are directly or indirectly related to any of the events under FIFA Under 17 Women's World Cup 2020. They have given this exemption because it is a matter of pride and privilege that FIFA World Cup is happening in India. That's where they gave this exemption. Next. This point is very interesting, very important. Listen. Services by hotel, guest house, simple line I'll explain. So for example, let's say there is a hotel. Let's say there is Shivateja. Shivateja went for stay in a hotel. Let's say hotel rent is 1200 per day. Then it's definitely taxable. Hotel rent is 900 per day. It is definitely exempt. When I say rent, that means net rent after discount. Net charges after discount, whatever amount they collected. Then, let's say if the amount collected is exactly 1000. Earlier, exact 1000 was taxable. But now they clarified that, now they made an amendment that exact 1000 is also exempt. See now, services by hotel, inn, guest house, club, campsite, by whatever name you want to call, guys. For residential or lodging purpose, having value of supply of a unit of accommodation below or equal to 1000 per day or equivalent. Now see the clarification what I gave in the last column. Now exemption has also been extended in case where value of supply per unit is rupees 1000. That is, such services are taxable where the value of supply per unit per day exceeds 1000. This word is important. That means now exact 1000 is also exempt. Earlier, exemption was given only when the amount per day was less than 1000. Exact 1000 was taxable. But now they made an amendment stating that exact 1000 is also exempt. Very brilliant points, guys. Sir, no time pass, no diversion of concentration. Please focus, please concentrate. I really want you guys to completely focus and get complete clarity of thought on the amendments. Amendments are of very important nature. High possibility that question will come in the exam. So please focus. Clear? And IDT is one such subject where exemption is very much gettable. So please don't miss that. Okay, concentrate, focus, listen. Next. Next point. Services by way of transportation of goods by an aircraft from custom station of clearance in India up to a place outside India. What is that service, sir? Service is basically transportation of goods by what? By an aircraft from custom station of clearance in India to a place outside India. Next line also I'll read. Services by way of transportation of goods by a vessel from custom station of clearance in India to a place outside India. So basically, service is given for transportation of goods by aircraft or vessel from India to outside India. This was actually exempt up to 30th September 2019. They amended this point and extended one more year. That is exempt up to 30th September 2020. That's it. Small amendment. Next slide. Granting of long-term lease. What is long-term? 30 years or more of industrial plots for development of infrastructure for financial business provided by the State Industrial Development Corporation. Practically, we have got industrial development corporations of every state or undertakings or by any other entity having 50% or more ownership of central government, state government, union territory to the industrial units or developers in any industrial or financial business area. So basically, government entities, what they do is that central government, state government, union territory, what they do is whatever industrial lands or plots they have got, they give it to an industrial unit for the purpose of development of industrial or financial business. Earlier, exemption was given when these plots were given by State Industrial Development Corporation or undertaking or by any other entity having 50% or more ownership of central government, state government, union territory. Now that point has been amended to 20%, highlighted in red in front of you. And some more conditions have been prescribed in this context, stating that provided that, see, very important, please concentrate, question may come. Leased plots shall be used for the purpose for which they are allotted. That industrial plots are given for the purpose of setting up a factory and doing business. So please use it for the purpose specified. That is for industrial or financial activity in an industrial or financial business area. Next, state government concerned shall monitor and enforce the above condition. They have to check whether they are using it for the specified purpose or not, as per the order issued by state government in this regard. Now, in case of any violation or subsequent change of land use due to any reason whatsoever, we are not concerned for the reason, but for any reason you are not using it, then the original lessee as well as any subsequent lessee or buyer or owner shall be jointly and severally liable to pay such amount of integrated tax as would have been payable on the upfront amount charged for the long-term lease of the plots, but for the exemption contained herein, along with interest and penalty. So it is important that whatever purpose for which lands are given, that lands must be used only for that particular purpose. If they are not used that way, then gone. Then gone. All the lessor, lessee, everybody will become jointly and severally liable. Next. Lease agreement entered into by the original lessor with original lessee or subsequent lessee or sublessee, as well as any subsequent lease or agreements for sale or lease of the plots to subsequent lessees or buyer shall incorporate in the terms and conditions what? The integrated tax was exempted on the long-term lease of the plots by the lessor to the lessee, subject to the above condition, and that the parties to the said agreement undertake to comply with the same. If they don't undertake to comply with the same, then the lessor, lessee, all the parties involved will become jointly and severally liable. So if you observe carefully, there are two interesting amendments what they have done. Number one, ownership percentage reduced from 50% to 20%. Further, certain conditions have been prescribed. What is the condition? Number one, it should be used only for that particular purpose. Number two, state government will monitor. Number three, in case of any violation, everybody, lessor, lessee, sublessee, everyone will become jointly and severally liable. And in sublease agreement, lease agreement, everywhere this condition must be specified. This is very important. Next, entry 22 amended, important. See that. Services by way of giving on hire to a state transport undertaking, a motor vehicle meant to carry more than 12 passengers. Example, bus. So if Shivateja has got one bus and I give that bus on rent to a state transport undertaking, then that activity is exempt. But now one new point they added here. That point is there. Whatever is there is there. One new point they have added is that service by way of giving on hire to a local authority. What? An electrically operated vehicle. Nowadays, a lot of importance is being given practically for electric vehicles because of pollution issues. Number two, because of maintenance issues. Number three, cost issues. Petrol, diesel prices are going up every day in and day out. It's going up. See here, to a local authority, an electrically operated vehicle meant to carry more than 12 passengers. falling under Chapter 87 of First Schedule to Customs Tariff, which is run solely on electrical energy derived from an external source, charging, or from one or more electrical batteries fitted to such road vehicle. Batteries fixed internally or by way of charging. With a view to encourage extensive usage of environment-friendly electric vehicles, GST exemption has been extended to hiring of electrical buses by the local authority. You have to observe that word, more than 12 passenger. That is same. So what was covered earlier was giving on hire to a state transport undertaking a motor vehicle meant to carry more than 12 passenger. Now what is also covered is to a local authority an electrically operated vehicle meant to carry more than 12 passengers. That's it. Next, two more new points added in exemptions. Let's see that. Service by way of storage or warehousing of cereals, pulses, fruits, nuts, vegetables, spices, copra, sugarcane, jaggery, raw vegetable fibers such as cotton, flax, jute, etc., indigo, unmanufactured tobacco, betel leaves, tendu leaves, tobacco, coffee and tea. So service by way of storage or warehousing of these products is straightaway exempt. Clear? Earlier exemption was given only for rice, only for few milk products, but not to all. So now to all these products, services of warehousing is exempt. Then services of life insurance provided or agreed to be provided to the Central Armed Police Forces. Sir, how much ever we give to army forces, that is less only. How much ever exemption is given to them, that is less, because they are doing a great contribution to the country. See now, services of life insurance provided or agreed to be provided by the Central Armed Police Forces under a Ministry of Home Affairs group insurance funds to their members under group insurance scheme of the concerned Central Armed Police Force. That is straightaway exempt. Then, general insurance business, one new point they added, Bangla Shasya scheme, Bangla Shasya Bima. This is being brought by West Bengal. This is basically being given to the farmers for protection of their crops. Bangla Shasya Bima Yojana. Next one, service by way of right to admission to the events organized under FIFA Under 17 Women's World Cup. This is basically on the entry ticket, no GST. On the entry ticket, no GST. What we covered earlier was services by FIFA, services to FIFA. Now we are talking about entry ticket. Then, clarification regarding applicability of GST on delayed payment charges in case of late payment of EMI. Now what is that? In simple way, I'll explain. So for example, there is one person, Mr. A, okay, and there is one store known as, let's say, Reliance Digital. Now, Mr. A approached Reliance Digital and Mr. A purchased a laptop on EMI basis. Now, price of laptop is 1 lakh. Now, on EMI, the price of laptop is going to become, let's say, 1,05,000. Reliance Digital is taking extra 5,000 because Mr. A is going to pay the amount on EMI basis. Now, my straight question, this 5,000 is nothing but interest, yes or no? Speak out. Now, in this particular scenario, my dear friends, that 5,000 interest is taxable, because this 5,000 interest is being charged by the actual supplier. That's definitely taxable. But other side, let's say, if Mr. A has taken loan of 1 lakh from bank, and pays 5,000 interest to bank, then such interest is exempt. Why it is exempt? Because service by way of extending deposits, loans, advances, where the consideration is interest or discount, that is straight away exempt. In first case, why it is not exempt? Because Reliance Digital is not engaged in the activity of giving loans or advances. It charged interest because Mr. A is making a delayed payment of consideration. I repeat one more time. Reliance Digital is not engaged in the activity of extending deposits, loans, advances. But Reliance Digital is only engaged in supply of goods, but it collected interest because recipient is making a delayed payment of consideration. So in first case, the interest is taxable, but second case, the interest will become exempt. This clarification they have given. Now what example I printed here? See, situation 1. X sells a mobile phone to Y. Cost of mobile phone is 40,000. However, X gives Y an option to pay in installments 11,000 every month before 10th day of following month over next 4 months. Technically, he ends up paying how much? 44,000. Correct? Now, as per the contract, if there is a delay in payment by Y beyond scheduled date, Y would be liable to pay additional interest of 500 per month. Then, in some cases, X is charging 40,000 for the mobile and is separately issuing another invoice for the service of extending loans to Y, and the consideration for which is the interest of 2.5% per month and an additional interest of 500 per month for each delay in payment. In this case, the amount of penal interest is to be included in the value of supply in terms of 15(2)(d). The transaction between X and Y is for supply of goods, not for giving of loans. Accordingly, penal interest would be taxable as it would be included in the value of mobile irrespective of manner of invoicing. But situation 2, you see, Y has taken a loan from ABC Limited and on that loan he paid interest. Then it's definitely exempt. That's the point. In first case, it's not exempt. Second case, it is exempt. I'm sure you got full clarity with the example of Reliance Digital what I have given. Clear? Done. Next. 1-2 more points in exemption. Clarification on issues related to GST on monthly subscription or contribution charged by Resident Welfare Association. So Resident Welfare Association is something like a apartment association where they collect every month some maintenance charges from the members. Correct? Now what they have specified in the law is that if the amount is up to 7,500, then it is exempt. But if the amount is more than 7,500, it becomes taxable. In apartments, we do pay maintenance, right? If the amount is less than 7,500, it's exempt. More than 7,500, it becomes taxable. Now see here. 7,500 is exempt. Now see next point. However, if the aggregate turnover does not exceed threshold limit, then GST will not apply even though amount collected is more than 7,500. That means what? Let's say every apartment owner is paying more than 7,500, but the total turnover of welfare association did not cross 20 lakhs. That means they did not cross the limit of registration. Then obviously they are not required to pay GST because they did not cross the limit of registration itself. Then RWS are entitled to take ITC of GST paid by them on capital goods such as generator, water pump, lawn furniture, etc. goods such as taps, pipes, sanitary hardware, and input services such as repair and maintenance services. And ITC will be allowed to RWA only when they are paying output tax. Obviously, common sense. If you are not paying output tax, how can you claim input tax credit? Next. If a person owns 2 or more residential apartments in a housing society or residential complex, shall normally be a member of RWA for each residential apartment owned by him separately, and the ceiling of 7,500 per month per member shall be applied separately for each residential apartment owned by him. So 7,500 limit we will see for each apartment separately. We will not combine both and see. For example, for each apartment he is paying 5,000, 5,000. You should not combine and tell it is 10,000. So GST should apply. That's not correct. That's not correct at all. Clear? Done. Next. Clarification on applicability of GST exemption to DG shipping approved maritime courses conducted by Maritime Training Institute of India. Sir, one thing, I'm sure you remember that in exemption point, we have one point which says that education as a part of obtaining qualification recognized by the law is exempt. Clear? Now here, Maritime Training Institute and their training courses are approved by Director General of Shipping. When they are approved, obviously it is exempt. Therefore, the courses conducted by them are exempt from levy of GST, subject to fulfillment of other conditions specified under entry. Then, clarification on the effective date of insertion of explanation in notification. Lot of times what happens is that they issue a notification and for that notification they insert an explanation. Then what will you say? The effective date or explanation. What will you say? The effective date for that explanation. That's what we are talking. See here, example. Let's say principal notification number 11/2017 dated 28th June came into force with effect from 1st July. Original notification came into effect from 1st July. Thereafter, a new entry is inserted with effect from 21st September. I repeat, 21st September, a new entry is inserted. Then, subsequently, an explanation is also inserted with respect to entry 36, that is new entry, on 26th July 2018. Now, what will be the effective date for this explanation? That's what we are talking. Now, see, although the effective date mentioned in the notification which inserted the said explanation is 27th July 2018, the said explanation will be effective from inception of the entry in the notification, that is 21st September 2017 and not 27th July 2018. So I repeat one more time, although the effective date is 27th July, that will be deemed to be effective from 21st September 2017. That is what is the point you have to observe. So net effect, they have clarified what is the effective date for the purpose of explanation inserted in an entry. That's the end of story for the amendments with relation to exemptions. Next, let's do one thing. These next parts of place of supply and the balance thing I will cover in part 2 of the amendments video. I originally thought I'll make only one part, but I'll split it into 2 parts so that it'll be easy for you to watch 2 videos separately. I'll not trouble you. Of course, I'll not make 3-4 parts. It's only 2 parts. 2 parts is only for the sake of convenience, that we are trying to split into 2 parts to make our job simple and easy. That's it. Not for the sake of splitting into 10 parts. Let's not do that. Only 2 parts. First part with this will complete. Second part, I'll complete the balance part. Clear? Done. Thank you.